Hey, good afternoon. It is Friday, March the 17th. I hope you're doing well today. It has been another interesting week in the mortgage business and in the banking business also because Silicon Valley Bank holding company, which is called Silicon Valley Financial, actually filed for bankruptcy this week, which leads to more interesting stuff in the banking industry. And there's another bank out there called First Republic Bank, and it was showing some kind of signs of weakness on their balance sheet. The Fed saw that, and so I've never heard of this, but they had 11 banks deposit $30 billion into their account and commit to leaving it there for 120 days. It's kind of a band-aid, but it's just the strangest thing. It's like if, a business was suffering and they went around to all the local businesses and said, hey, one of your competitors is having a problem here. Why don't you go buy some of their stuff and help bail them out? So it's an interesting situation at the Fed's request. So we'll see how that plays out, and I'll update you that in the coming weeks. But the big thing next week is that's when the Feds meet again to talk about another rate hike, and it could be 25 or 50 basis points, or they could decide to do nothing. It's the Fed, so I am going to bet that they're probably going to do a rate increase. Maybe it's their last one. I think it'll be a small one, maybe a quarter of a point, but I think we could see that on the market next week. So what does that mean? It means probably more volatility for rates. And let's take a look at what's happened this week, and I think that'll kind of give you a really good idea of what I mean by the volatility. If you take a look at the chart, when we had talked about, we'd had this bullish Morningstar pattern, which is usually or oftentimes followed by a rate reversal. And man, that is exactly what we saw. But what I want to show you is, look at these candlesticks. Now, just so you know, the fat part of the candlestick, that is where that represents the open and the close. So in this example, you can see where we opened, it went all the way up and then fell back down. Opened up bigger, fell back down. Every day there's a lot of indecision, and we seem to be going up but not holding those highs. I think that's a result of a lot of indecision or uncertainty ahead about what's going in the banking industry, what's happening with the Fed rate hikes. But ultimately, the good news is it has meant better rates ahead for us. So all that said, I think we're going to have conventional rates right now back down to the low sixes, which is going to be a really good thing. I think if that holds out or even gets better, if we get rates at 6 or even the 5s, I think we're going to have a crazy second half of the year. Pretty busy with a lot more pressure on housing prices again. Well, if you have any questions, let me know. This is Randy McMullen with Amstar Mortgage. Hope you have a great day.